Welcome back, traders and investors. We have Michael Lamothe on the line, and he is the founder of ChartYourTrade.com, a returning guest here on our show. Michael, how you doing this morning?
I'm doing very well, thanks. How are you guys doing?
We're doing good. We're getting a start. A little cloudy day, but a nice trading day setting up. Let's just start out by discussing, the current state of the market here. Made all-time highs yesterday in the S&P 500 futures. Pulled back a little bit, but now we're just hanging up there. What's your take on the market?
All right. So, well, the way that I analyze the market, I like to look at the NASDAQ, the S&P 500, and the NYSE primarily are the three indexes that I track. And I like to look at them on multiple time frames as well. I'll look at it on a daily chart, a weekly chart, and even a monthly chart. So which would you like to discuss first, if we're going to pick one?
Apple.
Oh, he was saying the charts.
The chart.
The indexes.
Oh, I'm sorry.
Yeah.
I had the S&Ps up there.
All right. So, regarding the S&P, so last week and each week I'll go and I'll do my own analysis. And what I picked up on last week was on the daily chart was we saw a bunch of distribution days pile up. Well, we saw a distribution cluster, but that's just one piece of the puzzle. What I also saw was that there was a support level around 1952 with the 50-day moving average cradling above that level. That was an indicator to me that we're still in a bullish environment. But then I would look at the weekly chart. And from a weekly chart, with all the distribution and all the geopolitical events and tragedies happening around the globe, you look at it on a weekly chart, and it's all more or less a non-event from the market's perspective. We're still trading at there's this long-term trend line. There's this more than 5.5 year uptrend line. If you draw a trend line connecting the lows from March of 2009 through today, you can see it on each of these indexes, on the S&P, on the NASDAQ, even on the NYSE, that each time that this level is approached, it could trade below it for a week or 2 weeks tops, but it's not spending any amount of time really below that level. It'll just hit that level and bounce. So for the past several months, a year or greater, I've used that as a primary level of support to trade around.
Michael, you used a term back there, and I'm not sure all of our traders or investors are familiar with it, and it was going back to the daily chart. And I think was it a distribution area or distribution center? Could you point that out to us and then discuss the dynamics on it?
Sure. So a distribution day is defined as a down day of 0.2% or more on greater volume than the day immediately prior. So what that points to is institutional selling. And when a cluster of these happen all at the same time, if you see 4 or more of those happen within a rolling 2-week period, that's an additional sign of weakness. But we always want to look at all of these signs and signals as a whole. We don't want to look at one thing individually and say, oh, well, there's a distribution day, here's a distribution cluster, it's time to exit the market. No. It's important to look at the whole picture and see where we are, which is why we're not just looking at one index, we're looking at a bunch of them, and we're looking at them on multiple time frames.
What does it tell you when you see this distribution day? Like, what is it usually telling you, pointing to?
Well, typically a distribution day signals that institutions are beginning to back away from the market, and it's when we start to have an elevated distribution count, somewhere between the realm of 5 and 8, that's a sign that the market may begin to roll over, pull back, or correct. For the most part, since last year, even going back there, I'm looking at a daily chart myself. Going back to June of 2013, well, we've seen the distribution count pile up while the indexes has continued to climb in these distribution days. So while it's important to keep track of them, that they've more or less been a signal of a pullback. Most recently, back in April, when the market started to pause around April, particularly on the NASDAQ, not so much on the S&P 500 and the NYSE, we saw the distribution count reach 6, and then it began to trade sideways.
Michael, what are the time frames for most of your trades? Do you are you primarily trying to do things intraday? Do you have a little bit longer term approach, or what do you prefer? You do a little bit of both?
I prefer a longer term approach, or intermediate to longer term. So my trades will typically last several weeks, if not several months. And the only time that I'm exiting a trade quickly is if it doesn't work out and it becomes a loss. I try to cut the losses very quickly.
What do you use any options here in your trading as well there?
Occasionally I do, but not too often.
Okay, so you mainly just stick with the stocks. Is there any specific stocks that you like to pick on? I know like a lot of traders like to trade the same kind of stocks or the same names because they really get a feel for how they're trading. Is there like a whole pool of stocks that you like to pick on?
So the way that I operate, I'll go and I'll run my screens weekly, and I'm not looking for a particular name to just trade this one name or that one name. What I'm looking to do is to see which pool of stocks the X, Y, and Z fundamental criteria, and then see which ones are setting up in the base patterns that I like to trade, and which ones are displaying leadership qualities, which ones are in clearly defined uptrends and have broken out of consolidations and continue to move. A few examples of those recently have been Apple, Skyworks Solutions, Shire Pharmaceuticals, and a whole bunch of others.
One final question for you here. When you're talking about your distribution day, how much does it need to close down, and how much does volume need to increase or be above average?
So the standard definition of a distribution day is 0.2% down on the day, and volume that is higher than the day immediately prior. So if it happens to be one share that's higher than the day prior, that counts. And that's not my definition. That's just the standard definition that's out there.
Okay, we've had Michael Lamothe on the line. He is founder of chartyourtrade.com. You can check that site out. Michael, thanks for coming on today and giving us your take on the market.
Thanks a lot, guys. Always a pleasure.